Hello, friends. Welcome back to Block Bytes. When I see the world of crypto and traditional finance collaborate, I feel excited about the future. It is becoming clearer that traditional enterprises are increasingly embracing blockchain technology. Although the extent of this adoption differs from country to country, the US is most certainly leading the way in the world of payments. In this video, I will talk about the three industry leaders in payments: Visa, MasterCard, and Swift, and how they are transforming the world of payments by creating a bridge between traditional finance and decentralized finance. Visa is the world leader in global payments between consumers, businesses, and financial institutions. It has already done over 263 billion transactions in the year ending March 2023, with a total volume of over 14 trillion US dollars. It all started in 2021 when Visa, for the first time, began to accept USDC, a regulated stablecoin pegged to the US dollar in a 1:1 ratio on the Ethereum blockchain. The result was that a user could now use crypto assets to purchase goods and services in their everyday life. Crypto.com became the first centralized crypto exchange and payments company to partner with Visa on this. Today, Visa has partnered with more than 65 crypto wallets, including Coinbase. In 2021, Visa-enabled crypto cards already did a total transaction of 1 billion US dollars. This may seem little compared to the trillions it has done with fiat transactions, but it is only the beginning. After tackling simple payments, Visa set its eyes on tackling another critical area of card usage called recurring payments using USDC. Recurring payments are essential as it allows users to automate payments. People have come to expect the ability to set regular payments with their cards. But this is a challenging problem on public blockchains like Ethereum, where users control their assets using private key, so the ability to pull money out of their wallets is not available. The engineers at Visa used the concept of account abstraction to create a new kind of account called a delegable account, with which automatic payments could be initiated to a pre-approved list of recipients. Since Ethereum currently does not support account abstraction, Visa deployed and tested its solution on Starknet, a layer 2 blockchain on Ethereum. Visa is not only enabling cryptocurrencies, but also CBDCs. CBDCs differ from stablecoins as they are digital representation of a fiat currency and not pegged 1:1 like stablecoins. Several countries, including the US, have shown interest in creating their own CBDC. 11 countries have already implemented it, with 21 countries currently piloting their own. CBDCs will be a reality soon. Visa and its partner Consensus are already working on creating a solution to incorporate CBDCs into its network of currencies. The work Visa did in bringing traditional finance and cryptocurrencies together was vital for this subsequent development. Recently, Gnosis, a sidechain on Ethereum, announced its new product called Gnosis Pay. Gnosis Pay is the first decentralized payment network to integrate with Visa. And their Gnosis card is the first Visa-certified consumer debit card directly linked to an on-chain self-custody wallet. According to Gnosis, The Gnosis card, which will employ the Visa payment system, will be a debit card directly linked to the user's safe wallet account, allowing them to purchase products and services using cryptocurrencies like any other debit card. Currently, Gnosis Pay and card are only available for the European region, but plans to expand to other countries and other cryptocurrencies in the future. Besides enabling cross-world payments, Visa is also involved with solving some significant issues within the decentralized world of blockchains. On 11th of August this year, Visa shared an approach towards arguably the most significant bottleneck that most crypto users face today: paying transaction fees. Everyone who has experienced crypto knows that to do transactions like buying and selling, you must pay a fee to the blockchain. The problem is that this fee has to be in the native token of the blockchain. For example, on Ethereum, this fee is paid with ETH, which means that you must have ETH in your wallet at all times. I have on countless occasions held off a transaction due to lack of sufficient ETH in my wallet, especially when I know that buying ETH using an on-ramp involves performing a series of time-consuming steps. To plug this problem, Visa devised a new solution that allows users to pay gas directly using their Visa card. With this new solution, wallets can now add this ability to pay for fees using a Visa card into their software. MasterCard is not far behind in the game. The world's second most prominent payments network, too, has embraced the world of crypto. MasterCard's Engage program allows any organization to bring their crypto card to the market. Like Visa, these cards also work on a network enabling seamless conversion from fiat to crypto or crypto to fiat. With the Engage program, MasterCard has created an ecosystem of tools, partners, and expertise that can be leveraged by any crypto or non-crypto company to bring their crypto card to the market. Last year, MasterCard surveyed around 30,000 people and found that 45% had recently purchased an NFT and wanted to buy more. About half of the respondents also wanted a more flexible way of paying with cryptos using a card. Following the study, MasterCard announced that all of its card holders could now buy NFTs from various marketplaces without using cryptocurrencies. MasterCard's EVP of blockchain and crypto assets, Raj Damodaran, exclaims that as his company's strategy to expand into Web3, which he calls the new version of Internet. But MasterCard sees the future beyond card payments. This year, it announced the creation of a multi-token network, an architecture built to bring the regulatory and compliance-enabled banking and financial sector into the new public-private blockchain infrastructure. MasterCard realized that the main reason crypto has yet to see the kind of adoption it deserves is that the banking sector has, by and large, stayed away from it. With MTN, it wants to remove any hurdles banks might have. In June, they announced a pilot project on the new MTN testbed to try tokenized forms of bank deposits. The idea here is that bank deposits will be tokenized and kept on a blockchain as digital assets. The MTN represents the underlying rails on top of the public and private blockchains created for traditional banking to reap the benefits of asset tokenization. Not surprisingly, the CEO of MasterCard, Michael Maybach, said at the World Economic Forum that the Global Interbank Messaging Network for Cross-Border Payments, SWIFT, may cease to exist in 5 years, making quite a flutter in the traditional finance world. But Swift is not sleeping over the crypto revolution. They too started experimenting with tokenized digital assets in early 2022. Swift realized that the future is the tokenization of assets. So they started testing with issuance, delivery versus payments, and redemptions using CBDCs. Just like Visa and MasterCard, Swift too realizes the importance of the on-chain world of cryptos as a technology pioneer and as a growing market. So in September 2022, it announced a partnership with Chainlink. For those who do not know, Chainlink is the decentralized data link between the current traditional Web2 world and the on-chain world of cryptos. Chainlink allows for the flow of data into the crypto universe. Data like price feeds, weather, news events, and everything that the on-chain systems need to function. With this partnership, messaging from this Swift network will find their way into the crypto world, effectively enabling the movement of tokenized assets between the traditional banks and the decentralized finance. Blockchain technology and the level of innovation brought about by the builders in this space have the potential to truly revolutionize the real world. Traditional finance monopolies like Visa, MasterCard, and Swift have realized that this new technology promises to bring efficiency gains and cost reductions to traditional finance, but has created a whole new market waiting to be integrated. I hope you like this video. Do like and share, and I will see you next time with another fresh bite. Bye.